Today, everything is up, but not in a good way. COVID cases, hospitalization rates, and also new unemployment claims are up for the first time in 4 weeks. We ask one economist if we're headed for another recession. Plus, Sonos shares explode higher after a strong earnings report from the speaker company. And finally, President Donald Trump has troubles up and down Pennsylvania Avenue. We dive into the finances and future of his DC hotel. I'm MacKenzie Sigalos, and this is CNBC After Hours. Stocks rose higher today. All of the 3 major indices finished in the green. The Nasdaq, which is comprised of a lot of big-name technology stocks, turned in the best performance of the 3, as Wall Street went back to the trusty tech trade as the coronavirus picture here in the U.S. gets worse. COVID-19 cases are rising, and hospitalizations across the country have hit yet another record high. Restrictions are tightening as well. The governor of Minnesota is closing bars, restaurants, gyms, and entertainment venues for 4 weeks. And today, New York City sent its entire massive public school system home for remote learning with less than a day's notice. Mayor Bill de Blasio said that it's, quote, only a matter of time before indoor dining is banned as well. These efforts to curb the spread of the virus are a blow to an economy that is already hurting. More than 740,000 Americans filed for first-time jobless claims last week. Those numbers had been trending lower for 4 straight weeks until now. We've talked a lot in the last week or so about how the stock market is looking ahead to the spring and summer when experts believe that the population will have access to a COVID vaccine. But the stock market is not the economy, and the American economy is still trying to pull itself out of the hole created by mass lockdowns in the spring. Now, with jobless numbers rising, more businesses closing, and no word on relief efforts from Washington, D.C., are we just digging ourselves deeper? Stifel chief economist Lindsey can walk us through it.
The U.S. economy has rebounded at a remarkably strong rate in the third quarter, more than offsetting the decline that we saw in the second quarter, at least in a percentage terms. Going forward, however, we're continuing to see more and more indications that the U.S. economy is losing momentum from here, particularly on the consumer front. The latest retail sales numbers show that consumer spending rose just a couple tenths of a percentage point, about half of what was expected at a multi-month low. Now going forward, as we continue to face an elevated level of joblessness, as we saw a big miss in claims this week, and not to mention the risk of further restrictions, the consumer is going to have an increasingly difficult time spending, as are businesses, if consumers continue to curtail spending going into the key holiday shopping season. That being said, let's now talk about restrictions. Back in April, when policies mandated businesses close and individuals stay in their homes, this resulted in the loss of tens of millions of jobs lost and businesses closed in a matter of weeks. This time around, even with a closure light scenario, it's likely to have equally devastating an impact on the economy, on businesses, on individuals, because we're already starting from a very fragile state after months of pressure. Not to mention the American public, I think, has less of a tolerance for restrictions this time around, particularly given that officials themselves are skirting the rules in the height of hypocrisy. But depending on the depth and duration of the second round resurgence and the subsequent policies put in place to help stem the spread of the virus, we could see the economy slow significantly going into the end of the year and into the new year, potentially falling back into negative territory. So a double dip recession, really undermining the optimistic prospect of a strong V-shaped recovery in exchange for a much slower, much bumpier pathway to pre-pandemic levels. There's likely to be long-term significant ramifications for the economy, both from an economic standpoint, the structural shift that we're seeing in how we work, how we learn, how we interact with each other, but also from a human perspective as well, with rising suicide rates, rising cases of abuse, and of course that long-term permanent impact on the country's youth as we have disrupted the educational process. So this isn't just a short-term blip that we're going to be able to come out at 100% on the flip side. This is something that could have long-term massive implications for the economy and the populace going forward.
Okay, let's get to our sound check. Here's a roundup of the day's biggest action and what the top newsmakers and business leaders had to say on CNBC's airwaves.
The fact that the GSA has not followed through with ascertainment of the election results is really a major impediment to us, because we're not able to be on the inside of these very important discussions in terms of how these different vaccines are going to be distributed.
There is no way that Trump can overturn these election results. There's no political way. There's no legal way. There's not going to be any military coup. There isn't any way that this election can be overturned.
The digitization of the pharmacy is one of the largest secular shifts in retail and healthcare of this generation. It's a massive market. It's $400 billion. And it's only 1 to 1.5% online.
They're not trying to do retail pharmacy. They're trying to improve their mail order pharmacy. That's what Amazon does. And that's what they've been trying to do for a long time. And other companies have too.
President Donald Trump is wrestling with the future of two big properties on Pennsylvania Avenue in Washington, D.C. First, there's the White House at 1600 Pennsylvania. Trump still refuses to concede the election to its upcoming resident, President-elect Joe Biden. And Trump's campaign just dropped a ballot lawsuit in Michigan, the latest development in its legal effort to challenge the results of the election. And then down the street at 1100 Pennsylvania, there's the Trump International Hotel at the old post office. The Trump Organization has been trying unsuccessfully to sell it. And as President Trump himself begins to transition back to life as a private citizen, the D.C. hotel has one of three likely fates. CNBC Wealth editor Robert Frank explains.
Well, the Trump International Hotel in D.C. is one of the crown jewels of the Trump business empire, both from a branding and a revenue perspective. But efforts to sell the hotel, which actually started last year, have now been put on indefinite hold. Now, I'm told the reason for that is they were looking for a price of about $500 million, but the bids came in at less than half that, and that was before COVID. So now you've got the COVID problem, which is just decimating hotels. And the election, and a lot of the revenues from this hotel came from the Trump campaign, GOP candidates, and a lot of lobbyists that were looking for favors from the White House. So what happens now? Well, the challenge for this hotel is that the lease requires whoever owns it to pay $3 million a year for 60 years to the government. Now that is a lot of money, and bidders tell me makes it difficult to ever turn a profit for this hotel. Now remember, when Trump won the rights to this hotel in 2012, he paid $200 million to renovate the hotel plus the $3 million lease. So $100 million of that was borrowed from Deutsche Bank. So what will happen to the hotel now? What is its future? Well, there are three options. The first is that Trump could sell it for a loss because it would be less than the $200 million that he put into it. Secondly, he could just default on the $100 million loan from Deutsche Bank and turn over the keys and get rid of it. The third option, which is the most likely, is that he would hold on to it, but because it would lose money, he would have to subsidize it and perhaps use it as the stage for whatever big media company he might start after this election. Now, whatever happens here, this hotel is going to be a critical part of the financial future of citizen Donald Trump. If whoever buys this hotel has to keep the Trump name, which they do, then it depends on how many Trump supporters after this election are willing to pay to belong to his clubs, golf in Miami, Mar-a-Lago, or this hotel. So it's really going to be tough for these three key pieces of his financial empire to get enough business from Trump supporters to pay for them.
Okay, time for today's numbers round. Let's kick it off with 18,000. This week, Bitcoin traded above $18,000 for the first time since December of 2017. Back then, the value of multiple cryptocurrencies soared. Once 2018 got underway, however, the crypto bubble burst and Bitcoin's price fell to around $3,000. The last few months of 2020 are starting to look a whole lot like 2017. Next, 10.9. 10.9 million households now own a product from speaker maker Sonos, according to the company's earnings report. That's 20% more households than the same quarter in 2019. This was a monster earnings report for Sonos, which turned a quarterly profit when analysts don't expect the company to make any money. Sonos is an under-the-radar version of those so-called stay-at-home stocks that we talk about literally all the time. With more people working and learning from home, many are choosing to upgrade the quality of their speakers and soundbars. And finally, 55. For the first time in 55 years, the Super Bowl is not accepting cash from fans at the stadium. In addition to reducing capacity at Tampa's Raymond James Stadium, the NFL and Visa are making payments at this year's game totally digital and contactless. And there's some really compelling data to back up this decision. Visa found that attendees at live events spend 25% more when using contactless payments instead of cash. If any fans do bring cash to the game, they will have access to reverse ATMs where they can exchange cash for prepaid debit cards. That's it for After Hours, but before we go, here's one more thing to keep an eye on. With the coronavirus showing no signs of slowing down, state governors have taken an outsized role in managing the twin health and economic crises, as the federal government takes a back seat. New Jersey Governor Phil Murphy has been no exception, and he'll join CNBC tonight on the news with Shepard Smith at 7 p.m. Eastern. Tune in then, or get all the highlights by going to CNBC.com and downloading the CNBC app. We'll be back here in our home office tomorrow with the new edition of After Hours, so be sure to catch us then.